Good morning, traders from every part of the world that you're joining this episode of the daily morning market call from. My name is Kefa Eric, one of the market analysts here at HFM, your broker and financial partner, number one in Kenya and beyond. Now, this is going to be a pre recorded YouTube video. Kindly visit the HFM YouTube channel at HFM Kenya. Like, subscribe so that you don't get to miss on important content that we post from time to time, which will be of eminent importance to your trading journey. Now, I take a 3-second moment of silence so that you can actually like and subscribe so that we move forward. Very nice. With that out of the way, we move forward swiftly. Now, fundamentally, what has been happening from an economic standpoint of view. From yesterday, we don't have any high impact news coming in. However, geopolitically, we see quite a number of things happening. And what are these things? Mainly, they are focused in the war front in Eastern Europe. And to kind of summarize them, we see the escalating tensions in the Ukraine, with Ukraine launching British supplied Storm Shadow missiles into Russian soil, where we witness a significant shift in conflict, and this means prices of commodities, and by commodities we are here by putting our focus on gold, is going to increase and continue shooting up, like we shall demonstrate in a few. Right, so we see a new dimension occurring where we see new players coming in. Britain, as United Kingdom, if you may like, is now outrightly supporting Ukraine, like what we said yesterday. Russia is facing a war escalation from Ukraine support by US. Now we see United Kingdom also supporting Ukraine. This is causing market uncertainty. When major geopolitical escalation like this will trigger market volatility. When where we see the prices of commodities, precious metal, gold in this regard rising, as investors tend to flock to gold as a safe haven, and that's why the demand for gold is increasing drastically. Also, the military tension or military escalation, where we see friends of both Russia and Ukraine coming in. Friends of Russia, like North Korea, coming in, military escalation. This is directly to mean high risk, which means high use of more powerful weapons. We know that the Russian state has recently amended its nuclear legislation to mean that in the past it could not attack a non-nuclear state, but it has changed its law to say if a non-nuclear state attacks her, that is Russia, and the non-nuclear state is supported by a nuclear state, it will consider using its nuclear on that non-nuclear state. What I mean by that is Ukraine is considered not a nuclear superpower, right? But US is. The Russian law before was indicating that it cannot attack a non-nuclear state, like with nuclear weapons, like Ukraine. But right now, Ukraine is being helped by a country with nuclear weapons. This is United Kingdom and US. So Russia has changed its position. It can now attack as long as you have a friend who is considered a nuclear power. So we also see a shift in US foreign policy. President Biden has approved anti-personnel landmines for Ukraine, which reflects the US commitment to the war. We see now United States is going all in, less conservative. The election is out of the way, nothing to lose. It's clear who is going to be the next president. Now we see US foreign policy changing. All this is escalating the war. We also see psychological warfare, where Ukraine accuses Russia of psychological warfare, where we see Russia posting uh, high heavy machineries and aircrafts closer to the Ukraine boundary, which is considered as psychological warfare, making Ukraine to kind of go in tension. This is causing a lot of escalation. Now we see investors' reaction. As the market reacts to these developments, we expect to see the prices of gold to continue rising. In uncertain times like this, and we have said this without numbers, gold serves as the traditional hedge against both geopolitical and economical risk. What we mean by that is, when there is fear in the world, gold has been traditionally seen as a safe haven. Okay, when there is geopolitical risk, like when there is war, when there are diseases, and when there is also economic risk, like we see. So we are going to keep an eye on these geopolitical events and they uncover, and we get to see where this takes us. It's a very good time to be a retail trader and investor right now, if you are able to demonstrate this and know what they mean. So beginning with our usual suspect, Euro USD, before we go to gold, we see that we have been trending on a sharp downtrend. This is majorly attributed to the US strengthening. Why has the US been strengthening? Number one, because of Trump's victory. How? Trump had promised less taxes and less regulation for US based companies. So guys are investing more in the US based companies because of less taxes. Less taxes means more profit margin, boosting the economy, which we translate to US economy holding up quite well. On top of that, we expect the Federal Reserve or the Fed to cut rates in the near future. And when they cut rates, they increase money circulation. When there is much more money circulation, people can borrow money cheaply. More businesses, more employment, boosting more economy. So that is why we want to see it come down low. Remember yesterday we said that when you see fundamentals analysis working to hand in hand with technical analysis, is not very nice. Yesterday you see it retested that particular resistance at 1.06010, and now we are heading to the support, right? Supporting the usual current contemporary dogma, or the US dollar strengthening day by day for US GBP USD. We see it also coming down the same. Remember yesterday we had news coming from UK, which was inflation rate, which came out positive, which should strengthen the GBP against the GBP against the USD in this instance. But what do we observe here? We observe that prices are continuing to move to the downside, right? Which indicates that the US dollar still has dominance over the Great British Pound, right? We see kind of shift here. If you know if the US dollar is doing good, you can interpret other currencies, and in relation to a currency pair, you know what to do. If the USD is doing bad, you know exactly what to do. Okay, so again, for AUD USD, we know this has quite been a tussle, with AUD also trying to fight back and being in a bullish trend, but overall we are in a bearish trend because of the dominance of the US dollar. So at this particular point, if you even go to a much more lower time frame, want to see this particular low here, take out this high to confirm the AUD strengthening all the way to this key level here, or resistance at 0.65696, or alternately we want to see this high which has formed here, take out this low and move down to this support, right, to indicate to give us good entries and exit with our beautiful risk to reward. Although we see that AUD right now is trying to fight back, and until we have a clear winner in this particular tussle between AUD and USD, we would want to look for much more safer assets to trade in. Now, this is the 4-hour chart. Let's begin on the daily, and this is the USD CHF. Now we are in USD base currencies, so the USD coming in fast. Here we see we're in a clear bullish run or a rally, and price came and retested this key level here, resistance at 0.88647. Now we see that the US dollar currently strength is being challenged by this rally, and we see it has retraced to what we would call discount level. So right here it would be considered much more safer to continue riding on the strength of the US dollar up to this key level or even beyond it. For USD JPY, also kind of a tussle. Yesterday we retraced to this discount level with this gravestone doji candle right here, and now we see prices is moving even much more to the upside. Remember, it is in a slight retracement, which would give us much more safer entries to consider going long on it. Although there are indications that the Japanese yen is doing better, but the overall trend as it stands is a bullish run. Go to a lower time frame to clearly see. As I remove some of these arrows which are making it hard to interpret, the chart should be quite clean. For USD CAD, we see a retracement, and remember, USD CAD inflation came out positive, strengthening the USD CAD, which explains this bearish momentum here. But what is happening currently, we see that we are at a negative 0.04, suggesting that the USD CAD is slightly in a bearish trend. But until we have taken out major lows, this is still considered to be a bullish trend. Until then, it would be safer to look for buys at technical levels to suggest the upward trajectory. For GBP JPY, from a daily time frame, we see price testing key levels quite beautifully here. Let's see clearly from a lower time frame, and at this particular point we see it gave us a fake breakout of this 196.490 key level, broke above it, a fake breakout. Now it's coming below. We know that the Great British Pound and the JPY are kind of struggling right now, because both news from both currencies, impact news, are showing that both economies are fairly doing good right now. So we want to see at least one of them being weaker, and we would technically explain that when we see price breaking out of this sort of consolidation, either to the downside or upside. Wait for it to get to a key level so that we consider now getting in for longs or short in either direction. For gold, like we have indicated, for gold we are in a clear bullish run. Will we get to the highest it has gotten to in known to the history of man at 2788.02? Only time will tell. And how can we tell as retail traders and investors? As long as the war keeps on escalating, we'll see price printing even much more higher. Like we said in the beginning of this episode of the Daily Morning Market Call, the war is escalating, and as long as this is the trend, we shall keep you informed here at HFM to make sure that you are updated with this. As the war continues, investors flock to a safer space, and gold has provided that for a period of years now. And right now, the Ukraine-Russian war is going to higher heights. New players are coming in. Friends of each country are coming in to help their friends. Military tension, psychological warfare, which would translate to high risk. High risk, people move to gold. Who are these people? Central banks and us. So as to find a safe haven as gold rallies to the higher side. Would want to see what would be its reaction at this 2687 key level here at support. But if the war will continue escalating per the weekend, we might see a break of this, right, or a little bit of consolidation. But in the days in the lower time frame, we might see retracement for safer entries. Would wait for a little bit of retracement and then continue rallying to the upside. So guys, that is it for today. Remember, by any chance, this is not financial advice. This is purely made for information purposes. Do your due diligence, and see you tomorrow at the same place, the same time, to do things the same way that has proven consistency. Until then, keep safe and observe risk management, and see you on the other side of profitability. Thank you.